we are going to start with the general, most common topic, which is why move to Portugal? So Portugal is a very high demand location in Europe right now because it has all of these characteristics that you all probably already know about. So it's a very, very safe location where you have a very affordable cost of living as a first world country with in access to Europe. And once you come to Portugal, you are able to use the free circulations of citizens in the European Union, which is a huge advantage. We also have very good weather, especially down in the Algarve, although this winter is not a good reference. Generally, you have 300 days of sunlight in the Algarve, and in the other areas of Portugal, it is a bit less, but it's not bad at all. And we have very friendly temperatures. They usually range, we barely have any snow here. I mean, I only saw snow for the first time. I had to go to the Alps, and I was like 16 at the time. We only have just a little bit of snow in Serra da Estrela, and it's not every year. So we are, it's a very a mean climate. The country is also very tech friendly with very good internet access and very fast speeds. I was actually impressed that it's actually better than the US when it came to both speed of internet and telecommunication network availability. And we are ranked 21st on the healthcare ratings of the world, and also have known to have very good education. Portugal is actually known of exporting highly expert individuals. So we are good at educating people and sending them to other countries. Living is definitely very affordable, but it's not that low from an internal perspective. And this is something that you will see a lot of Portuguese people complaining about. And I believe this is because there is a bit of a discrepancy between our cost of living and our job market and salary availability. And it has been getting better. To be fair, our government did make an effort, and every year the minimum wage is rising, but the inflation and cost of life are still rising a lot faster. So although from an international perspective, and especially if you are coming from US, from Canada, from London, and Britain in general, the cost of living here will be a lot lower, but it's still important to have an inside perspective and understand that some things that may be low for you might be expensive for the locals. But to give you an idea of what you can expect on a monthly basis for a household of two people, let's say, you can live comfortably alone, so just for yourself, with 700 euros plus housing costs. And housing costs can vary drastically depending on where you go, if you're buying, if you're renting, and all of these things. I would say that rent will be anywhere between 800 and 3,000. It can be a bit above that. It can be a bit below that, but I would say that's the most normal range. And that, of course, will have a huge impact on your budget.
So now I'll explain a bit of what the Portuguese residency kind of entails. Because there's quite a lot of confusion and misinformation out there. So becoming a Portuguese tax residency, there are sort of three different ways to do it, right? The main one is if you live in Portugal more than 183 days. However, it's not super easy to prove and for the Portuguese authorities to confirm how many days you stayed in Portugal, as there's freedom of movement. So if you're in Portugal and I live like 5 minutes away from the border, I go to Spain every 3 days and no one really checks, right? If I had a friend's house in Spain, I could live there. I could fly in to Seville from the US and then travel to Portugal. There's a whole lot of flexibility, and it's really difficult for the authorities to understand if you stayed actually 184 days, for example. So what actually counts, usually for finances, which is the Portuguese tax authorities, is when you change your address on your NIF. So the NIF is the fiscal number that you are assigned when you're here in Portugal, and you have to list an address under that NIF. When you get the NIF, you usually list like a US address or a foreign address. But when you change it to Portugal, that kind of triggers Portuguese tax residency. Okay. So any sort of things you do income-wise from that point forwards, you always have to consider the Portuguese taxes. So this is kind of my strategy to help my clients um, understand some of the financial planning or the tax planning concepts related to Portugal. So you should think of Portugal as these two tax buckets. Okay. One of the buckets, I'll start with the green bucket, which is the income tax. Right. Income tax it's the list, it's the table we saw before. It goes from 13% to 48 or essentially could go a bit higher to 52 and a half because there's solidarity tax on top. But it applies to wages, employment income, self-employment income, rental income, and pension. So IRAs, 401ks, 403b, Social Security. So think of all the income when you're in Portugal, all the income you're receiving, if all of this will go into this bucket, right? Again, with the NHR regime, there's that special case that I talked about on the pension. So all this is either 0 or 10%, okay, on the 1.0. So think that all of this will fill up this bucket. And then you have the other bucket, which is the capital gains tax. And that applies to real estate gains, investment account gains, Roth IRAs, and dividends and interest. Just a note here on the Roth IRA, because it generates a lot of questions, is an IRA falls into this category. So all the distributions from the IRA go into here. A Roth IRA is different because a Roth IRA is composed mostly with after-tax money. So in Portugal, even though the Roth IRA in the US has a free tax status, in Portugal it doesn't. So all the gains and just the gain portion will go under this bucket here. Okay. So it is quite important to have a split. So what the main key concept that I want to share today is before moving, analyze if there's any possibility, and we'll talk about this as well, any possibility of that when you're in Portugal, that your income can be split within these two buckets, right? So that instead of filling all the money in this bucket and every dollar that you bring paying 48% tax, that you can instead take some money from here, that some of the income falls under here and the other income falls under here. So you have a split asset base. So here's some of the considerations based on specific assets. So let's look at the pensions, right? Again, like I mentioned, you have to understand if you have an HR or not an HR. But some of the withdrawal strategies is before the move, and analyze if it's possible to take distributions from IRAs and 401ks strategically by spacing the withdrawals in lower tax brackets. So in the US scenario, you can take up to 600,000 and still be at the 35% tax, which if you wait until you become a Portuguese tax resident, that's 48% or 52%. Okay. Again, if you're not at the age to take IRA distributions because you get a 10% penalty, you can use Roth conversions. So it's instead of taking the IRA distribution to yourself, you roll it over into a Roth, right? This is a key. This is pretty important, especially if you have plans to move back to the US, right? Because in the US, the Roth will always have the free tax status. In Portugal, it doesn't, but you only pay on your gains. Right? You only pay the 20% on the gains. If you don't have much gains, your tax position is pretty efficient. Okay. So these are the generic ones when it comes to US pensions.
So we work with both renting and buying, and we also have standalone advisory and tour services. You can reach all of our services in our website in www.savvycatrealty.com.